Hello, everyone. Welcome back to the Prospero AI stock market live streams. Welcome in here on this green day across the board, even with Google having been down after yesterday's earnings and AMD also going lower. We have fought back to go green in the QQQ, and the Russell is leading us on the day right now at up almost 1%. So the markets are green across the board. I'll give you a live look at the beginning of the stream right now at the net option sentiment in Prospero so that we can check back in later on at the end of the stream and see if we've gone higher or lower in the meantime. Currently, net options is still only at 13 for the QQQ in Prospero, and the SPY is at 25. So the SPY remaining above the QQQ. I see a question from Mario on SMCI. We'll get into that, Mario. I'll be sure to pose your question to George when he rolls into this stream. Everybody who's here early, please like the video on YouTube. It helps us grow in the YouTube algorithm that determines our fate. So likes are appreciated if you enjoy the content. We're going to be talking today a lot about the companies that have reported. It was a very busy earnings week, so I'm going to bring up some of them like Palantir, AMD, Uber, Google, Disney. We're going to cover Amazon, which is yet to report. We have companies that have made massive moves in the past year. So we're going to talk about Reddit, which is one of them, that has gone up over 500% since it IPO'd just last March. So we'll talk about Reddit and a little bit about Twitter. Rolling from Twitter, an Elon company, to Tesla, an Elon company, hitting a new 2025 low on the year today. What is going on with Tesla stock? Why are we seeing weakness? And can it continue its uptrend that it was on before this recent downturn? Let me get a live number for you guys of where Tesla is at. I think it was in the 370s somewhere. It's at 380 on the dot right now, so a little bit up from its low on the day of 378, but still down over 3%. So we'll take a look at them specifically. Then we are going to get into another stock that has made an amazing move in the past year. It's a much more boring company, if I do say so myself, but not a boring stock, and that is Walmart, which is now trading at very, very high valuations for the business that it is, in my estimation, I guess. I'll give you the numbers of exactly what its forward PEs are, and I'll ask George if it's justifiable that this type of business and that type of company is trading at the levels it is, and ask some more questions about where it could go. You know, we're going to talk about the year it's had in review and maybe the year it can have going forward from here. Then another stock that's gaining a lot of attention today after Palantir had a crazy earnings move itself is a much smaller AI company. If you've ever heard of it, it's called BigBear.ai. Ticker is BBAI. It's making a massive move today. Last I checked, it was up over 50%. Let's see where it is now. Okay, so super volatile. It's up 47% right now, just off the highs of the day. And it's being called the next Palantir. So I'll ask George if he thinks this is legitimate, what you should do if you're a shareholder in a stock like Big Bear that makes such a massive move in one day. And if you're someone who's interested in the stock and it wasn't on your radar, but now you see the momentum, you like the company, you like the narrative, what should you do? Should you jump in when the stock is up 50% on a day? Should you wait for some kind of a pullback? We'll get into all of those details. And then we have one more story that I want to get into today before we turn it over to the model portfolio update at the end of the stream, and that is the idea of the USA creating a sovereign wealth fund has now been signed by Trump. So if this were to actually happen, would it be very beneficial for assets across the board that the USA would now be buying certain things? would it pick winners? We've kind of talked about that type of situation before in the past of um, even recently, the stocks like Tesla, Palantir, Coinbase, all the ones that were connected to the government support. Would this even be a further continuation down that road where if companies were added to this sovereign wealth fund, that they would just be back up the truck buys and all be 100 upside, 100 net option sentiment in Prospero. And then we're going to turn over to the model portfolio update at the end of the stream. I did this a few weeks ago. I asked you guys to type some tickers in the chat that I would track, and if there are any stories about them, that would help me because I could get to some of the stocks that you guys directly wanted to hear. One of those tickers was GRRR. Hello, George.
Hello.
Another one was NBIS. But if any of you guys are watching and you like a stock and you'd like to hear it mentioned on the stream, feel free to comment it in the chat right now, and I'll watch it for any future stories that I could talk about in future streams. But let's get started today. Now that we have you, George, in here, we have a question from Mario that maybe I'll get into even before we cover what's going on in the market today. He's asking, we got a question about SMCI on our last stream too, and now another one. So seeming like SMCI might be in the FinTwit world coming back into the zeitgeist. He's saying, hi guys, thoughts on SMCI with the positive run in the last few days and earnings on Monday. And I did see, I think SMCI was up 10% today, which interesting with the way that AMD reported and how their stock was this morning. But what's your latest thoughts on SMCI for Mario?
I mean, it has looked good in net option sentiment. It's just not, it's not an upside where we traditionally like it. That's kind of been, it has looked interesting. There's some social sentiment for it. I mean, it's the kind of thing that it could be a good idea. It's just not something that, we do. Sorry, hold on one second.
I think I forgot to also mention it in the beginning of the stream, but if you're someone who has watched these live streams and you use the Prospero app and you want to get a better understanding of our signals, we just posted a video on our YouTube channel of George explaining all 10 of them in detail. So after the stream, you might want to go check that out. It could help you understand and use our signals better. But George, today we're seeing all of the markets green across the board. The Russell is the one that's up most today. Interesting, after some weak earnings, or at least weak earning reactions that we saw at the open today, with Google being down, AMD being down, Uber being down. We'll get into all of those names in a moment. But is it a sign of strength, the fact that we got some weak earnings, we opened in the red, and the markets fought back across the board?
Yeah, I mean, I don't know. I think we're seeing a very weird market right now. I'm not sure it's a sign of strength, right? Because I think, we're going to talk more about Google later, but there had been some good earnings just because there was a few, weak ones. I don't think should change that much, but I think what we're seeing right now is a market that doesn't know how to properly price in all the risks. So you're basically seeing it get kind of hit hard one way, then swinging the other way. And that's the result of both what I'm saying, that, I think that overall apprehension. But one thing that tends to happen, especially now when the markets are more unsure, or it's happening more and more, is, people tend to lean on algorithms a lot more, especially when you think of someone like Warren Buffett not being in the market, going to cash, traditional investors kind of pulling their money out of it. That also kind of means, by definition, there's a proportionally higher bit of like active, more and more of that is going to machines. So I think that's the other reason you see these swings. Basically, you see, it hit a bottom, machines start to detect that bottom is being hit, and some of the other machines are doing it, and then it just going to swing back in the other direction. That's kind of what the market is today now.
And is there any way to fix that ratio between the Buffett-like investors and the robotic investors without the market dropping? Because Buffett's not going to start buying again unless some valuations come down. So how does that situation resolve without a little bit of a decrease?
You said it. Earnings have to go up disproportionately faster than price, or prices have to go down. Those people are very focused on, whether it be price for earnings or cash flow to earnings, or per share. Yeah, I think that it's just going to be a function of that for a lot of them. Now, obviously, there are a lot of investors that don't fall into any one category, so they might look for value more. They might be playing momentum depending on the day. A lot of hedge funds are multi-strategy. So yeah, but I really just think exactly what we're looking at are these these robots basically getting more and more power, because that's where the investments are going. That's the direction of technology. And then you kind of have a market that, driven by that momentum, is kind of scaring away the money of kind of the surer, longer bet money. So that obviously adds the volatility. If you don't have that stable kind of buy and hold institutional person playing in the market as strongly.
And you said, I think at the end of last week, that this was like what the hardest the market's been in a while. And is that because you can't trust a rally or a pullback? It's kind of like either way it's going. It's like seesawing so much, and it's not a clear bull market or bear market. We're kind of like sideways right now. So there's no trust in any of the moves that the market makes.
Yeah, I mean, I think for the first time, I think ever, I'm really watching like the aftermarket, even the night market, just because things are moving so fast. I don't want to get caught. So yeah, I think that caught in the wrong way. And I think it's just that news element too, right? I think all of the things that are going on in government, there's obviously some huge changes being made. So I think that's making a lot of people nervous. I think even people that, voted for Trump and are, big supporters of his, they can also be nervous about the volatility in the market, right? Both things can be true. So I think there's a lot of that. And there's a lot of kind of wondering, where this is going to impact. I mean, even if you just look, last night, there was a headline that said the post office was going to stop accepting packages from China. And then this morning it said they were going to reverse their decision. Like, what the fuck is that? Right? Like, it's really like, you can't, like, the post office is one of like the slowest institutions I can possibly think of. And even they can't stick to a decision for like more than 12 hours. How are stocks, which move at a much higher pace all the time, how could you expect those to not change as quickly? So yeah, I just, I can't stress enough that I know when you look at long, I actually saw a post of someone in, like, I think it was the Robinhood trade group or one of the Facebook groups that I'm in, because I do research in them and just see what people are saying. And someone was just like, the buy and hold are basically, the time in the market people, outperformed the timing the market people here, or like the people that sold or whatever. And I like kind of actually responded to that, and I was like, well, I sold and then bought when it was lower, and that's a way better result than buying. So I really think, this is not advice that I traditionally give, but these are weird times. I mean, I'd really start to learn, whether it's paper trading or anything, I'd start to learn how to short stocks because it's a tool that I think you're going to need in your toolkit in this market. And I say that buy and hold thing. I'm not sure with all this stuff going on that you're going to want to buy and hold as an optimal strategy, right? It's hard to time the market. Definitely. I think we help people time the market, and we have a very good track record. of that, but you obviously have to get the fundamentals down. That's why I'm saying practice. You don't want to lose a bunch of money because you don't know what you're in, or the functions of how it works. But yeah, like the market's very overvalued, right? I think people were depending on, policy to keep pushing it up. And while that may be coming, right, very well could be coming, there's also all of a sudden these very, risky policies being pursued, and change is risky, right? And I think we can all acknowledge there's a lot of changes going on. Change is risky. Big change is risky because you don't know especially how it might interact with an international partner. Like, I'm not convinced that the way DeepSeek announced and everything wasn't a reminder from China that they could fuck with our markets around the tariffs. I'm not convinced of that. So, I'm not saying it's likely. I'm still preparing for this to be more of a bull market than a bear market, but I think some people kind of think too narrowly and they don't think in scenarios. I can see various scenarios where the market, there's an event, probably an international one, maybe trade related, anything like that, that ends up shocking the market downward and it just gets into a free fall. That is why anytime I see a down day, you see me start shorting stuff like left and right. So yeah, it's tough. I think I'm not sure buy and hold is the right strategy right now. I just typically I say it's better. I do think in typical markets it is, but how overvalued the market is, people like Buffett sitting out, like that's for rational reasons. And if you are not ready to have a quick trigger finger to either sell or profit on the way down, and why I short instead of sell my longs is because there's arbitrage to be had between liking stocks and disliking others, right? A lot of the times I'm just like, oh, these losers I have much less faith in than the winners that I'd like to hold in case the market swings the other way. That's why I like to short, right? Because I look at it like this. I can hold on to a stock like AppLovin and short Dell and still get the AppLovin upside, and maybe even get a scenario where AppLovin goes up and Dell goes down. You just manage your risk a lot better. And I don't really see a scenario, and we kind of saw this play out with DeepSeek. I don't really see a scenario where AppLovin goes way down and Dell doesn't also go way down. So, it's kind of important for me to organize things that way. But yeah, I think that what I'm doing and what's, it's worked pretty well. I'm having another really good year, but what I'm doing is I'm taking every little move, every little swings seriously. And I recommend other people at least start learning the tools that you need to do the same.
And with all of that being said, it would be tough for me to imagine that you would recommend a stock like BlackBerry. I see we have a question about it from Jonathan. He's asking about it. It's increased about 90% in the past year. So what are your thoughts on BlackBerry?
What is the ticker?
BB is the ticker.
This is kind of similar to SMCI. It's just like the upside is not there for me. 62. Net option sentiment looks good. Dark pool looks good. But yeah, the rest not there for me. Not good enough.
So let's start to get into, because we had a lot of stocks to cover that busy earnings week that's happened so far. I guess I'll go back to Monday's earnings with Palantir, which had a massive move that sent the stock up to a $240 billion company at its peak in market cap. we're seeing it give a little bit of it back, but it's holding up for the most part around 100. 240 billion market cap on around 3 billion expected in revenues. Can this type of valuation sustain itself, or is it a little over its skis?
I mean, I think this is just an extended Trump trade, right? And I think, this one is an even easier one in some ways than like Tesla or Coinbase, right? Because Peter Thiel has been, a big Republican donor. He's been close, in Trump's extended circle. Then, the VP choice, Vance, a lot of people say, Thiel and Vance were, in the same circles as well, in venture. And people say that, Thiel was a big reason that Vance got picked, right? So I'm saying all this. If you don't know, Peter Thiel was one of the founders of Palantir. That's why I'm talking about him much. Also one of the PayPal founders. Was he an investor in PayPal or was he in the mafia? I don't really. I think he was one of the founders. But yes, very prolific investor. Actually, his book 0 to 1 is a great book. And that's why it's like the amount of business that Palantir does with the government, that's an easier line to draw, right? At the end of the day, Trump or Musk or whoever pushing like Tesla, some kind of exclusivity, full self-driving, whatever, that would have to be a new thing that was passed. And that could get challenged in court, right? It would be very like Palantir already does, plenty of business with the government. Their contracts just getting a lot bigger is just easy. And that's not really something that you could challenge in court. Besides the fact that defense spending is like huge, like a huge amount to Palantir is not really a big amount to the, defense budget. They were also funded by In-Q-Tel, Palantir, which is the DoD, CIA, their investment arm. So yeah, very close ties to government, obviously close ties to the founder and Trump. And, I think that's an easy way. I think people are basically saying that like those revenue forecasts don't include any potential new business. So I do think if you're trying to like value the company, and actually we're, in the newsletter tomorrow, I'm going to talk about like price targets and how value might be dead. And, one of the things about these price targets is, I don't think people, especially a lot of analysts, they're still just looking at old, discounted cash flow models, and they're not accounting for the acceleration of technology, or, not just the acceleration of technology, also this, the fact that there might, I think some people buying Palantir are assuming there's going to be a lot more business coming their way.
And if you're someone who missed Palantir, there's a stock that's getting a lot of attention today. It was up over 50% at one point. It's called Prospero.ai, and it's being dubbed as the next Palantir. It's under $2 billion in market cap, and what sent it up so much today was the fact that they got a Department of Defense contract. Do you have any thoughts about this stock, and how should someone go about this when a stock is up 50% on the day? Even if you're excited, is it the right time to get in?
One thing that I wanted to say about Palantir before we move on to this is for people that are in it, I got out of it today when I saw that the net option sentiment had gone down into the 40s. It went up a little bit, but I just want to mention that to people that are in it. All that being said, like of what I just said, I think we might get another dip and I'll get back in. I've done that a few times with Palantir because I ultimately think it's going to go up. As for Big Bear AI, I want to take a look at their PE because I don't know that off the top of my head, and I do want to know before I talk about it. I imagine it's a pretty crazy valuation. Why are they doing this? Not currently available. Let's try. Let me try one other thing.
I think they might have no earnings right now. Maybe that's why.
Yeah, but I'm looking at future. I don't. So 2025, yeah, -17, 2024, negative. I mean, I wanted to actually get the numbers before, and like, yeah, that's crazy, right? It's just like, I mean, you could make money off of it, but it's a pure momentum thing. And it's like, it's a bunch of people that are really, really speculating on it. And I think the main problem with that, right, is it could do very well, but we're always talking about alternatives, right? I think there's just better risk reward alternatives, like, Palantir, that has that like direct connection that I do think is going to go up. I'd rather own Palantir than Big Bear AI, even though Big Bear AI, you could make many more multiples. It's just like, I don't think people are always very good at assessing downside risk in these kinds of things. They're only looking at the upside, right? And I don't know in much detail exactly what Big Bear AI's approach is, or their core, what their selling points are, what have you. But what I do know is this: they aren't that big. These things change rapidly. And whatever their tech or sales process is could be, outperformed by a new company. It could be a company like Palantir that just gets better at scaling and can offer prices that might be more competitive with Big Bear. It could be a lot of things. But I just think that the biggest kind of mistake we're talking about assessing downside risk is like most people that know absolutely nothing about AI are investing in this, or I would say the majority of their investors probably know, very little compared to, professionals in the industry, anything like that. And it could be a great investment. I just think the risk it's too much. And if this gets posted, I'm sure people are going to come to me and come in months and say whatever. And, I'm not saying there is an upside. I am saying that the downside risk that might not come to fruition is too high relative to other stocks for the reward.
Well said. And moving on to AMD, which I think a lot of AMD shareholders were very hopeful heading into the earnings because it had been beaten up so much that the bar would be low enough where they could have a nice move upward off of it. And that is not what happened. The stock was sent lower again. And it was the first time we talked about it about a month ago. It was actually when you were in London, I think, where I said, I wonder if Lisa Su's job is at risk. And I saw some other people posing it now. So what's the latest on your thoughts on AMD stock? It just can't catch the AI wave.
Yeah, it was kind of funny. I said no and then yes, right? When I looked at their actual stock performance. And yeah, there's we talk about bankruptcy death spirals for companies, right? But there's also, death spirals for CEOs, right? And people talking about them getting fired is definitely a phase in the death spiral, right? Sometimes boards will make move without like, the public calling for it or talking about it, but that's more if like someone did something in their personal lives or some major mistake that maybe wasn't public yet. This kind of firing of like an established person that's been in the job, there tends to need to be at least some negative public attention for the board to make a move, right? And what I looked at is like the same thing that other people are looking at, where at the end of the day, if people don't have faith in your leadership and the stock performance isn't there, there's a whole matrix of these analysis points, right? You could have a growing company that is doing pretty well objectively, that the stock price is going down because people have no faith in the leadership, right? Or you could have a company that's not doing so good. I mean, like, I think what happened in Tesla's earnings is really interesting, right? They missed and the stock went up because everybody got so excited about what Elon Musk had to say and the way he hyped everything up, which is fair, right? But we're just talking about kind of like a converse here, where the numbers weren't there, but the personality and the faith of the CEO carried the stock up, right? I'm not exactly sure what we have here with Lisa Su, right? Because the problem isn't necessarily like AMD's doing. I actually want to see their history of beating and not beating.
I think I saw their data center, which is like what people care about most, was up like over 60%, but it still missed. So they were disappointed with that a lot. And I don't think they mentioned AI at all on the call, which was another thing people were really mad about.
Yeah, see, they've beat. I'm looking at the last 4 quarters. They beat on EPS and revenue all the times, right? So I wanted to confirm that before. So see, that's basically an instance where the company is doing everything that Wall Street expects, right? But it's not doing well for the stock. And I think that's because they're doing what Wall Street expects, but they're not doing well relative to the competition. And at the end of the day, and the big thing that stands out to me is like, I remember a conversation. I remember when I was doing the chips trade a few summers ago around the chips bill. And I was looking at a few different names. I don't really remember. I think maybe Intel was one of them, or I could go back and look. But when I was looking at that and talking to them and doing research for it, some people were talking to me about how much AMD. I was like, oh, it's really going to be GPU driven. And people were just like, no, AMD is doing a lot of stuff with CPU processing that they think might compete, blah, 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 all that stuff. And there was, AMD probably putting stories out about that, and it never came to fruition, right? And that's a perfect example of, probably something that a CEO decided, right? That said like, oh, we're going to invest in basically, everyone should remember, like, one of the things that NVIDIA does so well is the software that runs the hardware, right? So they were making a similar investment and said, oh, since CPUs we're kind of better at relative than the competition versus GPUs, we're going to lean into software that can, efficiently process larger tasks with these CPUs in concert, right? And that right there is just an example of like a tangible example I can think of. Well, I don't think that worked out very well. And something that's the kind of thing that might get you fired as a CEO. But like at the end of the day, it's just what we kind of zoomed out to initially, which is just like, if you're beating on estimates and you're still not getting like the results, like in terms of stock price, like it is kind of an indictment of the leadership. And unless that turns around, and it's like, it actually is hard, why we call it like a spiral. It's hard now that the stock performance has been disappointing and people are talking about that she may get fired, right? That's going to scare more people away from the stock because of the perception around her and that she might not be the right leader. So yeah, I think that's something to keep an eye on. I'm not saying it's going to happen for sure, but these spirals accelerate. So, what you'll probably see is if it continues in the spiral, you'll kind of see probably more headlines on it. And typically you might get either if it ramps up, you'll either get, a statement from the company or the board that says, we have faith in Lisa Su to try. That's a lot of times that's the last ditch effort, right? Reassure the market. They like Lisa Su. But that's basically just a one last attempt to stick by their person before they fire it. If results continue to get bad, or sometimes they just, pull it, or they'll put it to like a, they'll put it to a board, they'll hold an emergency board meeting or whatever if the stock, is going down fast enough, or they'll do it at their organized board meeting. But yeah, if you do see, I think a lot of people are just like, oh, they're not going to fire her. If you do see a board come out and say they're not going to fire someone, a lot of the times what that means is this is the last chance that they're getting. We'll give them one last vote of confidence.
Okay, and so the last of the earnings that I want to bring up today is Google. The stock is getting hit pretty hard, down about 9%. Their earnings were decent, but they had soft cloud numbers. I'm wondering if it looks like that's affecting Amazon. Amazon has yet to report. They're going to be tomorrow, I believe. Anything to read in there, and you're a little bit more nervous for Amazon because of Google. Another point that they also said is they're going to have a $75 billion capex. So this DeepSeek AI narrative of less spending doesn't seem to be true for Google, at least.
Well, I mean, that's good and bad, right? You know, they're spending all that money. That's basically an admission that they don't have comparable technology to DeepSeek, right? So yeah, I think that it's interesting. I think the cloud in particular is interesting because I think I don't know off the top of my head, but I feel like cloud beats most of the time, like for the cloud providers. Like that's just something off the top of my head, but I feel like I've read that a lot more than I've read that cloud misses, right? And there's some pretty aggressive business growth targets as well. So I'm saying that to say that like what's eating into that? Like what's that a result of, right? Is the AI boom slowing down? Well, chip sales don't really say that, right? So have people already started going to other cloud providers, right? Has, DeepSeek's been around, right? Have other people maybe started to look at more, international cloud? I mean, that I do not know. But I don't think misses are common to surprise. So yeah, I think that's very, I think Google, I think people are losing faith in Google. It doesn't have, like, if you look at the PE ratio that it trades at, it's been pretty disappointing, like the lowest in the Mag 7. And, YouTube is obviously doing well. But I think overall, if I'm thinking about just like what the perception is of a company, like there's perplexity that has come along and all of a sudden people are saying maybe Google won't own search forever. I'm not rushing to that, but you also heard kind of the similar thing with ChatGPT that didn't come to fruition. But I think overall, the perception around Google is not what it used to be.
Is that setting up for a meta situation or a meta type situation where a stock gets beaten down and it becomes so cheap, and then as long as the company is able to spin, you can go on a massive bull run like Meta has done? It's been unreal. And I think their valuation being so cheap was a lack of faith as well. Maybe a similar spot.
I think it's a little different because that was just like, that was an overreaction to, Mark Zuckerberg just investing a ton of money in something that wasn't really helpful to their core businesses, like way ahead. It just wasn't a very smart thing to do. Google's not doing anything dumb, right? So they're not going to get hammered in the same way. And I don't think there's that same like bad undervaluation. And I wouldn't call it an undervaluation because, like, from my perspective, Google is going to have to, kind of like we talk about Apple, like, but they're not all the way down where Apple is in my mind in terms of lack of innovation, because they have made good innovations, more recently. But I think they're really in a position where they're going to have to show that, whether it's some new, they can actually figure out how to do something with Gemini and Gen AI, or whether they figure out like a product that they can sell into, on a B2B basis better, or they come up with something new on search that makes it easier. But yeah, I think search especially, As I'm talking about it, I just think, it's getting more and more ad ridden. Like sometimes you have to scroll down a good amount before you actually see the results. And that is kind of a bad process for a product to be going through, right? Where the product gets worse because they're trying to monetize it more and squeeze out more value, right? And the other products start to get better, right? I think what I would need to see from Google is some kind of innovation on search. But you know what the problem with that is? If they rolled out something that was like more, direct, more efficient, like just delivered you results in a different kind of way, more like, Perplexity, then that would eat into the whole way their ad system was structured. And that is the problem that we always come to in large companies, right? Innovation sometimes and monetization are at odds. And the company that is actually willing to innovate, a lot of times is going to be in a better position.
So we were going to talk about Reddit and Walmart today, but we're running out of time, so we'll save them for Monday. So if we have any viewers
I can do it quickly. We can keep going.
No, I have another one that we'll get to, but if there's any viewers that want to hear about that, you'll have to come back Monday. Be sure to be here 11 a.m. when we talk about that. But what I want to cover lastly today is the sovereign wealth fund that was announced this past week. How are you feeling about it for the USA? I think it's kind of funny because we hadn't talked about sovereign wealth funds at all, and then last week we talked about Norway, how they're the biggest. Maybe the USA is trying to challenge that pretty soon.
Yeah, I don't love it. Like what we said is like, why did they have a sovereign wealth fund? Because we have a lot of debt, right? It's for a country that has as much debt as us. Like imagine if there is a market crash, right? And we lose like, 30-40% of our sovereign wealth fund when we're already like in debt, right? It's not great. I'm not saying it would happen, and it could be, it could be something that ultimately like pays off our debt. But, I'm just like, with the amount of interest that we pay, like if we have excess money to invest, I just think it's a better idea to start paying off debt. And like, irrespective of all this stuff, like, whether we pay off debt or sovereign wealth fund, whatever, like we for a long time needed to get our budget under control, right? That's thing one. I would love to talk about a sovereign wealth fund, right? If we had, if we were running a budget surplus, right? I would very easily say, okay, we're taking half of that budget surplus to pay off some principal on our loans, the other half in sovereign wealth fund. I'd love to do that. And I honestly think it is time it's overdue time to balance the budget. But like, yeah, it's like, if you heard your friend doing this, right? And they were just like, oh yeah, I've got, about 35% of my income, or I think it's maybe more, but I don't know. About 35% of my income goes to debt payments every year. You think I should start investing in the market instead of like paying down my debt? You would tell me they were crazy, right?
Investing on margin.
Yeah, exactly. Like, and I think it's kind of good to look at analogies that way. And some people do that, and it's sad because it is. But I mean, the other side to it is it's just, what's the best way to say this? I mean, I don't even know if it's legal, like, but to like basically like do like, Nancy Pelosi type investments, right? If you're basically going to be making money on stuff that you think is going to become policy, like that's not a bad idea if you're in debt. It's just very ethically, it's very ethically questionable, especially because there's always two sides on the trade. It's definitely ethically questionable if you're basically like extracting money outside of taxes from the American people and giving it to the government. Because there's always like a winner and a loser in a trade. But yeah, it's just, it isn't us having more money is not a bad idea. It's just like, and I worry about what happens, right? If we have a sovereign wealth fund, right, and we're just engaging in that kind of overt market manipulation, it could cost us people investing in our markets, or it could also incentivize, other countries to do the same thing and like withhold information, bet on events that profit for them and not. It creates a standard that could ultimately just screw the everyday investor that much more than they already are, because you have countries that have a lot more inside information than hedge funds, kind of making that the information asymmetry problem that we have in the world even worse right now.
Yep, just a further continuation down the road that we've been on. But we'll do the switch over now. See you on the other side. I see there's some things moving, so stick around, everyone, for when George gets back here to do the model portfolio update. I was looking at Tesla making a new low on the day at 376 now. Looks like the markets are kind of selling off a bit. I mean, not too crazy, but in this last 10 minutes or so, just a little bit of a move lower. Nothing too intense here, but we'll see how it goes the last 10 minutes of the market today. Let's take a look back at the QQQ and the SPY net option sentiment that we were looking at in the beginning of the stream. They were both at, I believe, 23, 25, and 16 or something around there. They were both pretty low. I'm looking at the QQQ now. It is at 10. So heading back towards single digits almost. And the SPY is at 31. So that's interesting. So in the last hour of the day today, the QQQ net option sentiment went lower while the SPY went higher. So even less confidence in tech, it looks like, and a little bit more confidence in the sectors outside of tech. Something to note as we close here. QQQ is still positive, but it is the lowest index on the day, plus 0.16%. The Russell is leading of all the indices at plus 0.84%. So we'll see if they can all hang on to green as the market closes today.
All right. Let's see what we got here. Sorry, I'm just getting everything set up.
So I believe Meta was going for 13 straight days of being green today, and it's green right now. So let's see if it can do 14 tomorrow. Pretty impressive. I think they said it's the longest streak in its entire history of being a stock.
This is, they're making a lot of the right moves.
They said, I think it's since Trump has been president, it's never been red. Someone said, which is kind of funny way to put it.
Wow. Okay. Let's get this going. Okay, what are these?
SPY is 31 and QQQ is 10.
I feel like those two are like flip-flopping now.
That's the market we're in, right? The volatility.
It's getting exhausting.
What do you think of that overall level for SPY at 31? Is that neutral to you or bearish still?
Pretty neutral. But I like with QQQ at 10, that makes it like I think it drags them both down a bit.
Mm-hmm. Small caps are starting to look better on the 1 week. Small cap growth and mid cap are the top two, and large cap growth is just short of the bottom. This is an interesting contrast. We'll think over the weekend on changing our portfolio more if this continues.
That's interesting.
Tech is doing well, but small cap growth is not. That is also an interesting contrast, really reinforcing the troubles today for the largest tech companies. Consumer discretionary looks like a bear target again. And we should also look for a real estate bull too, as the best sector on the 1 week.
Okay, as we have done lately, I want to take a little look at the exits here first. Come on. We'll come back to that. Where was... I think we'll take on one. We'll take one piece of chip exposure. Oh, this Okay, I actually want to do this. Okay. Barely. Okay, then what do we got going here? All right, we got that done. And then I might as well take a look at these with everybody. Good. Those look good. All right. Unless there's any questions, I think we are done.
No questions, just parting question from me. Chiefs or Eagles, who are you taking?
I think I want the Eagles to win, even as a Giants fan, because I just want
way.
I want John Mara embarrassed.
True, that would be
He
good.
needs to, like I want Saquon Barkley to rush for like 300 yards and win Super Bowl MVP, and the Eagles win. Like the more embarrassment for John Mara, the better.
I partly agree. I can't blame you in that thought. But all right, everyone, have a great weekend. Rest of your investing week. Hope you enjoy the Super Bowl. We'll be back Monday. Catch everybody then.